welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trade setup and of course we'll get you top market voices helping you understand the strategies that you need to follow. Remember yesterday the first day of FY26 did see a sharp downturn in the markets. We did see about a 1 to 2% kind of a cut on the frontline indices. This was largely led by the nervousness that was already spread across the world. Global indices had already been reacting to the nervousness ahead of tariff announcements that are slated to come in tonight on India time 1:30 a.m. and 4 p.m. For the US or Washington time as well. But what we are given to understand is that the markets are already in a very rocky position at this point in time. We'll try and help you understand what are top market experts really, how are they gauging this event that is going to be transpiring tonight, and what exactly will that mean for the world and for the Indian economy and the markets at large as well. We've already been seeing a lot of export-oriented sectors come under heavy pressure. Yesterday it was IT stocks that were again feeling the heat and the pressure there. It's again, the money flowing to safe haven assets like gold, which continues to be a record high level again. So that's the kind of position that world investors are taking. Again, the world will be on edge to see what will be announced tonight. So far, the indications are that US President Donald Trump and his government, they want to go ahead with no exceptions as far as Trump tariff announcements are concerned, reciprocal tariffs on all the countries that he has indicated before. But at the same time, we are also looking at India-US bilateral ties taking shape as well. There are newer MOUs that are getting signed. So we'll see how the positioning of India will change when it comes to tariffs with respect to what Donald Trump announces. We have a very special guest joining in, Mr. Gaurang Shah, Senior Vice President, Geojit Financial Services, now joining in. Warm welcome to you, sir, and thank you so much for taking the time out. For all our viewers, I spoke to Mr. Shah just before joining in, and he said, when I asked him how is he feeling, he said, I'm rocking. I want to ask you, Mr. Shah, now, is this, the markets are also rocking. So what would you advise the investors and traders to do? Should they participate in this ride, enjoy the thrill, and or should one be really, really cautious at this point in time?
As far as I'm concerned, I was rocking for all good times and all good reasons, and markets were rocking for all the bad reasons, which we already know large part of it. It was only an official reaction to what is going to happen late uh, tonight or early morning tomorrow morning in terms of the impact and to what quantum on what goods and services, to what extent, on which countries, all the details will be known. But the noise will be there from US at least for the near term as we go into the near term future I'm talking about, Sakshi. And that will possibly keep the markets on the edge of the chair. Indian markets, I think, by and large, yesterday's reaction, and of course, it was a very soft beginning to the new financial year. Yesterday was 1st April, Sakshi, beginning of the first day of the new financial year. Rather very soft because of the reasons known to all of us and what's going to happen later on tonight in terms of tariff. Uh, I would not really, read too much into it. Counterpart to what America has said in terms of reciprocal tariff, Indian governments have already reduced duties on certain goods and services that comes into India from US. We had a delegation in US meeting with Trump administration trying to soften the impact of the reciprocal tariff. And we've also read that Indian government is ready to further bring down. As far as US is concerned, their tariff structure is very, very low compared to what India or rest of the country tariffs in terms of what goods and services comes into their country from US. So I think it's a wait and watch game. I think respective countries and leaders would want to have an equitable growth and a very conducive environment for all economies to coexist together. I will give more importance to 9th of Feb when I believe the 9th of April, I beg your pardon, credit policy, 25 basis point is what the anticipation is. And of course, then later on, I think from 10th April onwards, we will have the earning season unfold for the fourth quarter financial year gone by. I think
Yeah.
that should keep the market excited. Today, tomorrow, maybe, or for all the official reasons, you might have the markets react, but we'll have to understand what is the quantum and which is the country which may possibly feel the least impact.
Absolutely. Now, Mr. Shah, they're calling it the Liberation Day, and I think all the investors back home would be hoping that they are at least liberated from all the tariff talk that has continued to make the markets uncertain and volatile for so long. Once and for all, if you have to implement it, just implement it so that we can move on and deal with it and look at the forward, what could be the next few triggers. What would you say that traders should do? How should they want to position themselves? Once this uncertainty is going on and on, how long will it continue is the big question.
Well, that's honestly speaking, you can't. Honestly, I don't think even President Trump knows that. Because, he'll get up one fine morning, he would have possibly dreamt of something in his sleep. He would get up in the morning and then find a executive order. I mean, no president, according to me, has signed so many executive orders in such a short span of time that
Yes.
he's been the president, re-elected rather, Trump 2.0. Any other American in the history of American presidency, I don't think any other president has signed as many executive order as Trump has done. So it's very difficult to preempt as to what comes in his mind. And like I said, and more importantly, Sakshi, I think we are only looking at one side of the
Yeah.
coin. The flip side of the coin is that US economy, US citizens, US consumers will have to end up paying more for whatever goods and services that comes into their country from the rest of
Yes.
the world, be it Mexico, China, be it Canada, be it India, be it South Korea or any other country. Because eventually the landed cost is going to go up, right? If the tariffs go up. So the companies are going to pass it on to the consumers over there. And the economy was there is also, softening a little bit. So it's not like only rest of the world is going to have a negative impact. American economy, citizens, consumers in America will also have to end up. Inflation will, inch up. Interest rates, as planned by Mr. Powell, will not possibly go his way in case if the inflation has to inch up, etc. So we are in a very sticky wicket. My sense, Sakshi, is at Geojit that we will possibly have a total clarity by end of June. And from July onwards, we'll have stability in the market. Till such time, we will have to face a little bit of choppiness and volatile. But if you're a trader,
Yeah.
I think what we spoke last time, 23,800 to 24,000 is a very top heavy feeling for the Nifty. And the lower end, which we have broken, and we are trading closer to the second lower end, is 23,200 to 23,000. Now, if we're able to, save this bottom 23,000 to 23,200, then again we may go up to 23,500, 23,600. So try to, maximize your profit, put your stop losses in the system, don't keep it in your head because
Yeah.
markets are very unpredictable.
Markets are very unpredictable. So, since you do believe that eventually things will, settle down, it is just a matter of time. And if one has to really look for their long-term portfolios, strategize for those, should one now take the benefits of these lower prices that we are getting, the volatility that is happening at this point in time, and what exactly should be the focus? Should one really go inbound, look at the sectors that will be least impacted by all these external shocks? What are you advising clients, sir?
So actually, there is always, there is always a discipline in stock market. If you are not disciplined, markets are going to punish you. And then you can't blame anybody else but for yourself. So don't, first of all, don't go into lesser known names just because they have fallen off the cliff. Okay. Maybe there is much more depth still there for those stocks to bottom out. So don't try to be a Robin Hood. Avoid small cap, micro cap, lesser known names. Stick to the large caps where there is value and there is a visible growth in terms of earnings visibility as we go into the future. Select mid cap ideas are also something sector specific that you can look at. You asked me a question as to what are those sectors which may have the least impact of the tariff. So, we did an exercise last week and the week
Okay.
before, and we came to a conclusion that real estate, cement, hospitality, hospitals, that is healthcare related. I'm not talking about pharma. I'm talking about healthcare hospitals. These are some of the sectors which may possibly may feel least or no impact of because they are no way connected to what Trump is talking about, at least as of now. So
Okay.
our sense is that this is, and of course, banking and finance.
Okay.
So this is one. These are about four or five odd sectors that I would request your viewers and long-term investors to look at. In terms of earnings that I spoke about fourth quarter last financial year, our
Yeah.
sense is that banking, finance, possibly autos, cement, cap goods, engineering, defense. Okay, defense is also another sector which
Yes.
may bypass the impact of what Trump is talking about.
Perfect. So we have all those sectors in case viewers are still looking out for how to hedge their positions, look at the long-term portfolios. You can concentrate your portfolio with these 4, 5 sectors because these are likely to get least impact of the Trump tariffs. Okay, Mr. Shah, then you did talk about some of the sectors and I will come to those. Defense is something that you just marked and we are again seeing a wave of recovery take shape on the entire defense story. Largest ever order signed by HAL. Although just a tad bit of softness when it comes to meeting the overall order flow guidance for BEL for FY25. Shipbuilders are coming back into flavor again. How are you navigating through the defense moves at this point in time? Already we've seen for some of these stocks, they've recovered 25, 30 odd percent from their all-time lows that we recently saw. So, is one again missing out on the upward rally? If somebody is still very cautious, what should they do?
Never live in a FOMO factor,
Yeah.
in stock markets, Sakshi. Because when you end up in a FOMO factor, you end up taking decisions which are not rational.
Correct.
So don't ever feel that, that FOMO factor in the market. Markets are always here to give you opportunities. It's up to you to take it. If you've not taken it earlier, fine. I mean, so what?
Yes.
There are plenty of opportunities. So on defense, my sense is that the entire defense pack. I'll go into name specific in later on where we have coverage in defense. But let me, actually, I have always mentioned one thing that if you are investing in defense related companies, please have 3 to 5 years kind of time horizon because it
Yes.
takes long gestation time to uh, uh, get a prototype ready of the order that you got, and then getting that prototype model approved from various levels and then going on to mass scale. You can't make a Prachand light combat helicopter overnight, nor can you make a Mark 1 MK1 Tejas next generation fighter jet, which is capable of carrying state of the art missiles, beyond visual range missiles, BOVRs, as they call it. And of course, we have more clarity in terms of the G404 fighter jet engines supplies have already started. I think it should possibly help the next avatar or the next generation of Tejas MK2 fighter aircrafts. Prachand order augurs extremely well for Hindustan Aeronautics Limited. And I don't know whether you read about this report or not, Sakshi, but just for your and your views information, I think it was last year or something when we had the Dubai Air Show, and
Yes.
over the kind of performance that Prachand delivered, I think the world was at awe of their light combat helicopter called Prachand from Hindustan Aeronautics Limited. So we
Yes.
like Cochin Shipyard, we like BEL, we like BEHL. Other companies which are relatively very strong, but since we don't have coverage, it is not a recommendation, just a reference to the strong companies in this particular sector. That is by default, of course, Hindustan Aeronautics Limited, Garden Reach, Mazgaon Docks, BEML, to name a few. Then there are quite a few private players which are also contributing to the defense. And one more important thing, Sakshi.
Yes.
Forget about our reliance and cutting down on our imports as far as defense is concerned. I think with that policy change way back in 2015 or 16, if I'm not mistaken, foreign FDI into defense, these companies have capability of getting in a lot of orders from the rest of the world. So export market is also a big opportunity.
Okay, fantastic. So that's as far as the defense story goes. A lot of those stocks named which are, promising in future for long-term stories, 3 to 5 years, as Mr. Shah has mentioned. Let's also welcome another guest on our show. We have Kiran Jani, Head of Technical Research at Jainam Broking, also joining us on the program. Kiran, warm welcome. Good to have you with us. The markets have settled in the green in the pre-open. 23,192 is the implied open now. There is a 26 point of an uptick that we can expect. Kiran, we did have some signs of a recovery in the initial part of yesterday's trading action, but then everything fell flat after what, about an hour odd or so. What exactly would you foresee for the session today? Will we continue with that same volatile pattern, because tonight is when the announcements on tariff comes? So what would you advise one does on benchmark indices today?
The market is little bit cautious over the international news. But if you look at the technical perspective, Nifty has given a far better rally from 22,000 towards to 23,800. Now, after this rally, if you use Fibonacci retracement, so the very much important level, 28.2% retracement level is somewhere around 23,140, which is very important level. And yesterday we have seen market has defended that level. Another very good support is 61 days moving average, moving average. That is also a very good kind of a support for a Nifty. Similar chart pattern we can visible on Bank Nifty also. Bank Nifty has a multiple support, like 200 days moving average is there. We can also see there is a gap resistance, there is a gap support between 50,800 to 50,500. Yesterday, Bank Nifty consolidated between that level only. And also, we can see momentum indicator taking support of the Bank Nifty near bullish zone. So, multiple support are there. We can expect this gap up opening will remain sustained for the entire day. And past or maybe the later of today, we can see some relief rally also. So level wise, if we discuss 23,150 to 23,200 would be the great accumulation zone. You can keep accumulating, keep a strict stop loss below 23,000, and we can expect price target of 23,500, 600 by this weekend. And if we discuss about the Bank Nifty, definitely the everyone is looking at next week RBI policy. But before that, we can expect again Bank Nifty to reclaim 52,000 kind of a level. So at current market price, when it dips towards 50,800, 700 would be the great buy opportunity. Keep a strict stop loss below 50,500, and we can expect 52,000 kind of a level before the RBI policy.
Okay, we'll keep an eye out on all those levels then, and Kiran, and we'll keep that in mind. Coming back to Mr. Shah now, sir, you did also take the name of auto space. We have been seeing the auto sales numbers come in. Many have actually, surprised the street, beat the estimates as well, beat M&M, Maruti, Royal Enfield for that matter too. How would you really look at the auto space at this point in time? It's been a very, very volatile space to be in of late. Are things going to go in, better in the new fiscal year for the entire space?
Sakshi, I think this is one sector where the sword is hanging in terms of Trump tariff tantrum. If you ask me, well, honestly speaking, notwithstanding what President Trump is talking about, short to medium term, there could be an issue in terms of the news flows and how it will possibly get impacted. But long term, my sense is that there is tremendous amount of opportunity. So be it Tata Motors, M&M, Maruti, be it in terms of two-wheelers, whether it is Bajaj Auto, TVS Motors, Hero MotoCorp, Ashok Leyland, Eicher Motors, Escorts, Kubota, and total green play in terms of Electra Green Tech. We are positive on all these names.
Fair point. The markets have started to take in the green, and welcome so. 23,199 at this point in time. There's a 30 point of an uptick on the Nifty. The Nifty Bank about 0.3% higher, better off than the Nifty today, 50,984 currently for the Nifty Bank as well. When we look at the key sectors that are holding up, it's a mixed trend. You have FMCG, consumer durables up and about. You also have names within the IT pack, financial services, banks, consumer durables also up and about as well. What's on the lower end? You have metals, oil and gas, pharma. Then you have the broader markets also feeling some pressure at this point in time. Top movers on the Nifty. You have Zomato, you have JSW Steel, HCL Tech, you have Bajaj Finserv. All of these stocks mildly higher into the green. What's in the red is BEL again. Grasim, Maruti, Bajaj Auto, SBI Life, Dr. Reddy's. These are the stocks which are slightly softer in trade. India VIX is about 0.4% up at 13.8. We'll keep an eye out on that. PSU stocks about 0.7% lower in the index level. You only have ONGC and Coal India among those select stocks that are up. In the F&O space, you have Tata Consumer Products that's holding up about 4%. IRIDA. You also have Bharat Forge, Oracle Financial Services, Infosys and Macrotech along with these names that are up and about in the F&O action. Let's look at the broader markets to see what else is moving up in trade today. You have names like very, very far and few between names that we can talk about. Walchand Nagar Industries is up and about today, about 5% circuit that can be seen. Aban Offshore is up in trade. You also have Imami Realty, Kernex Microsystems at a 5% circuit. Then you also have names like, back films that's up within the media pack, and that's also pulling up the stocks. Very, very far and few between stocks. Let's hope the opening settles down. Kiran, to you, how do you see the opening, and any key stocks that have struck you right at the opening tick? Kiran?
Yes, sorry. So as we discussed, that market has closed at very much important level, and today gap up opening were expected. Now the gap opening is happening, and looking at initial reaction, we can expect this gap up opening will remain sustained for the day. First, I would like to comment on Bank Nifty. As we can see, Bank Nifty chart is very much promising than the Nifty chart, as Bank Nifty has given a breakout from 50,500 level as a double bottom pattern breakout, and considering that pattern, we can expect price target of 53,000, that which is pending also. Now, yesterday's corrections or yesterday's price reactions can be considered as a retracement, or as in consider like in the retesting of the previous breakout. Now, at current market price, after today's gap of opening, market is sustaining above its 200 days moving average also. So let's wait and watch for the till 10 o'clock. If market keeps sustaining and holding 51,000 level, then definitely later part of today we can see some sharp rally in Bank Nifty also. So banking stocks are on our radar. PSU banks and private, we have a divided view. If we discuss about the private, then Kotak Bank looks very much promising. If you remember, we discussed Kotak Bank multiple times. And now at current market price, Kotak is giving a fresh breakout, a flag pattern breakout, which can be take place once Kotak is crossing 2170. As of now, Kotak is trading at 2150. So at current market price, you can go long. Keep addition on above 21,080 or a 70 level. Once that price is crossover, then we can expect a sharp move on Kotak towards 2300. So we are very much optimistic on Kotak, and we are aggressively recommending Kotak since last 6 months onwards. And we are seeing that this 2025 would be on name of Kotak. So we are looking very big targets on Kotak. So as of now, Kotak, as for the intraday, as far as investment perspective, you can go long. One more sector which we are liking, that is an auto sector. If you look at the Hero Motor Corp, it is forming a very good pattern at current market price. Previously also it has a fractal pattern. So once Hero Motor Corp is giving you retracement till 3,700, that is a good opportunity. Even at current market price, you can go long. Keep a strict stop loss below 3,680. If that price is not broken down, then you can expect price target of 4,000, 4,100 in upcoming time. So Kotak and Hero Motor Corp are the preferred pick during this time.
We'll keep an eye out on both Kotak and Hero Moto at this point in time. Mr. Shah, coming back to you, IT space is something that I wanted to discuss with you again. Again, like you pointed out, 10 days hence, we will finally have the results season kickstart with TCS coming out with the results first on 10th of April. Today, there is a slight recovery after yesterday's, sharp cut that we had seen. But of late, the sentiments around IT have actually turned a lot sour. What exactly do you think is the reason for that? And retail investors who've been holding large IT names like Infosys, TCS, HCL Tech in their portfolios. Wipro, Tech Mahindra was a trend name in the first half of FY25 as well. What would you advise them at this point, sir?
See, actually, the problem is the kind of news flow. Of course, 1990 is also one of the sectors which may possibly come under the sword of Trump tantrums and tariffs and trade. There is no clarity up till now. But if there is going to be slowdown or if there is going to be recession, there is some kind of feeling on the street that the discretionary spend and budget cuts will happen for IT spend. We are of a different view altogether. But this is the view on the street. We saw it, the kind of reaction. Fourth quarter, historically, Sakshi for IT sector is a little bit soft. But if I have to not look at this short-term, medium-term tariff-related, speculation or budget cuts or discretionary spend, long-term growth is absolutely there in IT companies. We have coverage on mid-cap, small-cap, and large-cap IT names. So don't look at too much of what's happening in the short-term, medium-term. Shut your ears as far as the short-term, medium-term noise pollution is there. We believe there is tremendous amount of opportunity for long-term in the IT sector.
Tremendous amount of opportunity for the long term in the IT pack. Okay. Another sector that you had named where you are positive, sir, is the banks and the financials. Wanted to just get a sense of your preferences. Kiran has named Kotak Mahindra Bank where he's bullish on for the new fiscal year. In case one has to start building on their portfolios for this FY26 by adding on some banks, financial services, PSU banks, private banks into their portfolio, what is the ideal mix that they should look at?
So, Sakshi, my sense is that don't restrict yourself in terms of only private sector banks, only public sector banks, or only strong NBFCs. Our view is that have a bouquet of the financial and banking sector in your portfolio. And I would also go to the extent of saying that financial and banking is a must in your portfolio. Uh, Having said that, I think all the there are 4, 5 public sector banks: State Bank of India, Bank of Baroda, Bank of India, Canara Bank, Indian Bank, PNB, on which we are positive. On the private sector side, almost all the banks, starting with your HDFC, Axis, ICICI, Kotak Bank, which has been a star performer over the last couple of months. IndusInd Bank, which is in the news for all the wrong reasons. We believe there is a problem, but it can be resolved over a longer period of time. Then you have smaller names like Federal Bank, City Union Bank, IDFC First Bank. So have a select few from public, select few from private, and in the NBFC diversified we have Cholamandalam, Shriram, Bajaj Finance, L&T, M&M Finance. A lot of names who are there to create a portfolio in the banking and finance.
Okay, fair point. So those are some of the names that we can definitely keep an eye out on. Let's focus on some of the other stocks that are buzzing in trade. Anything that we can mark out for Kiran to help us out with the strategies. Kiran, what's happening in the F&O space? Tata Consumer Products today is the top mover there. Any other stock that actually catches your attention which could actually ride on the momentum?
If you look at the market structure, definitely the FMCG counters are back into the action. Tata Consumer is one of the pick we are also considering. Looking at the overall chart pattern, it has given a breakout from rounding bottom pattern. Earlier also the same pattern breakout came at near 989, 90 level. From that level, the stock price reached up to the 1068, and from now again it retraced to its previous breakout level. Now from that level again, stock price is getting back into the height of high bottom pattern. As of now, looking very strong at current market price. Definitely one can go long at current market price or any dips towards 1020, 1030. Keep a strict stop loss of 1000 rupees, and you can expect price target of 1100, 1120 plus. Coming to the another stock of FMCG, definitely you cannot expect the momentum, but definitely based on the risk reward ratio, it's look very much promising. So Hindustan Unilever is one of the stock pick from our side. It has given a breakout from double bottom, but it is not sustaining above 20 to 70, 20 to 50 level. Once the stock price keeps sustaining above that level, we can expect sharp recovery on HUL from that level. So at current market price, if anyone want to go long, they can go long. Keep a strict stop loss below 2180, and you can expect price target of 2300 for the short term. And for the long term, definitely you can expect price target of 2500. But one is supposed to give a time. So HUL is not for the momentum, for the investment, and for the momentum, Tata Consumer you can go long.
Okay. Mr. Shah, we have to thank you soon, but I want to first understand from you before I let you go for FY26, which has just begun. What are the chances that you're penciling in that we will cross the earlier highs of 26,277? sooner than we actually expect.
It's a difficult one, Sakshi, to be very honest. At this point of time, when you have tariffs kicking in, I don't want to
Again.
stick my neck out. But I mean, if I have to pencil down our thoughts, and if somebody has to put some common sense in the US administration in terms of what he's doing, and if there is going to be some wisdom and fine sense of judgment prevailing, Sakshi, I think possibly, like I mentioned, July onwards, we'll see a lot of stability coming into the market because we'll have a lot of clarity on a lot of political issues, geopolitical issues across the globe. Locally, we have just one state election in form of Bihar election. We don't have anything after that till next year. So we'll have politically, stability over here. With the changes in the budget, expect new financial year to through push to consumption. I think the new all-time high that we've seen up till now is 26,277. Correct me if I'm wrong on the Nifty spot. My sense is that by December 31st, 2025, we would be very close to that mark. And by March 31st, end of this new financial year, I think we should be comfortably above those levels, provided there is no geopolitical joker or no some very risky dream that comes to Trump's mind in the future.
Okay, well, we'll thank you then, Mr. Shah. It's always a pleasure to have you with us. With your undying optimism, we are hoping to ride on to that and continuing to hope that things will get much better from where we have seen and where we are at the present moment. Thank you so much. Hope you have a great time,
Thank
and we'll
you.
see you very soon again on another edition of Business Today.
Thank you,
23.
Sakshi. All the best. Thank you.
Thank you. 23,240, 77 points higher in trade, and the first 15 minutes candle is just about to get formed. So we are probably inching slowly and gradually higher. Kiran, what is the sense that you're getting? Should one believe this or should one take this with a pinch of salt?
So basically, of course, it is, if we discuss about the international cues, definitely it is not in our hand. But apart from these all lighter note jokes, we can definitely be little bit cautious. But considering our market and our setup, one should be confident over above economy and overall data point. And we have to cautious. You can hedge your position with the puts, but definitely stay invested.
All right, okay. We'll focus on some of the other stocks then. I want to bring out some stocks that were in the news today to see how they are really reacting in trade. Let's pull up, the stock of Trent, for instance. Goldman Sachs had come out with a buy rating here with a target price of 8,120. Remember, Trent has already been on a recovery path. Last few days, we've seen strong moves here too. They are saying that the large positive surprise in Zudio store additions in fourth quarter is something that they are betting on. Store additions are accelerating have accelerated in FY25 and should revive the investors' confidence. They also believe Zudio store has long runway in terms of store penetration as well as the value market share, and that's why they have higher targets on this one. What is your sense, Kiran, on Trent? Has one again missed the bus because the stock has already recovered about 25-30% in the recent 1 month? So, or should one actually go all guns blazing because we have seen higher targets here?
So honestly speaking, today morning I was scrolling over LinkedIn and I was seeing some of the news over Trend also. So there was a one creative I have seen, if I'm not wrong, in Times of India or some of the newspaper, there was a ad from Trend that they are crossed over 1,000 stores. Number one, as you mentioned, that Goldman Sachs is also expecting similar lines. Another thing is that they are now having a digital content creation calendar. So every day there is some and other stylish content creating calendar are out there, so definitely it will help to create leads, it will help to accelerate their sales. So the same thing we are reflecting on our chart patterns also, as you discussed. Stock price corrected from 8400 level to 4700 level, and from 4700 now it is 5600 level. It's a clear cut recovery space after a long time. Stock price is trading above its 20 and 50 days moving average. With that, stock price has rounding bottom pattern breakout also, the momentum indicator back into the bullish zone. So we are not expecting a similar rally which has happened since last 2 years. But yeah, slowly and gradually one can keep adding this particular stock at 5500 or in range of 5000 to 5500 range. Keep a strict stop loss below 5000 and you can definitely expect somewhere around 7200 for sure. It's a long term target for this fiscal year, but yeah, one can keep long on trend on every day.
Okay, fair point. Kiran, we'll also welcome another guest on our program now. Mr. Avinash Gorakshakar is joining in. He's the head of research at Profit Mart Securities. Warm welcome to you, Mr. Gorakshakar, and thank you so much for taking the time out. Well, we are sitting on the day which is being seen as and being referred to as the Liberation Day in the US. The Trump tariff announcements are slated to come tonight, India time 1:30 a.m. and the markets and investors are all sitting on the edge. The world is on the edge looking to find out what exactly will be announced and what kind of an impact could that have on India particularly. What's your sense, sir, as to how are you gauging the impact of tariff announcements could be? Do you already have some sense of any key sectors that could probably be, on top of Trump's radar when it comes to tariffs, so that investors can well be prepared or hedge their positions against those sectors at this point in time, sir?
See, I think clearly the sectors which possibly could get impacted immediately are sectors like automotives, auto parts, chemicals, pharma, IT. I think clearly, whatever product and services exported to the US markets is going to attract tariffs. And I think tariffs essentially will increase the cost of the product, and that definitely is not good news. It's very difficult to pass on these cost increases immediately to customers. So I think, broadly, these are the sectors which are going to feel the heat immediately. I think what an investor needs to do in these kind of markets actually is just wait and watch, because this is just the beginning of a series of announcements which are going to be made. Tonight, we will come to know what are the exact tariffs on specific products and services. And after that, the market will start reacting on a sector and stock specific basis. But I think now the entire attention of the markets, at least for the near term, would get focused on the domestic themes. Sectors like cement, infrastructure, capital goods. For that reason, typically whatever is sold in the domestic market is going to be more safer as compared to what is, exported. So I think near term, the markets will be volatile. I think you're going to see earnings season starting from the 10th of April. And I think that also will give a added flavor to the overall market sentiment. I think our expectation is that the January to March quarter could be much better than the December quarter. But overall, I think, you need to wait and watch. I think tonight is just the first day of the formal announcement of reciprocal tariffs. I think there are many more announcements which could come in over the next, say, 6 to 8 months. So it's going to be a volatile period, but one needs to be stock specific. And I think the panic in the market is completely out, despite the fact that tariffs will be coming in. I think this is something which is now more or less discounted at least 50% by the market. So it's not that the same news could create the bigger impact. So I think it's a time to nimble into good quality stocks, good quality businesses. But I think the time frame has to be slightly medium to long term.
I have to ask you, in case 6 to 8 months of volatility is something that we are getting prepared for, what is the ideal way to go about the sectors and the stocks that could provide that hedge? Even if not create an alpha, it's very difficult to create that alpha in this kind of a volatile market with even the best of the stocks, best of fundamental names, because you do not know what is coming when. And, rethinking, reimagination, a lot of strategy revision will have to be done on the country level, on the business levels as well. So, at this point in time, what's the best hedge that one can probably do? What is the rejig that one would need to do in their own investment portfolios at this point in time?
No, I think we have been telling our clients to focus on domestic themes like consumption, hotel and hospitality, capital goods, cement, infra. These
Okay.
are defensive bets which possibly could give a better buffer in this current volatile market scenario. And I think one thing which got left out in my earlier answer was that the tariffs are not a very big issue. The bigger issue for a country like India is if there is a recession in the US, then
Yeah.
that could put a big spanner in the works for many manufacturing companies from India, IT companies from India. So I think one worries that whatever tariff announcements Mr. Trump is making, ultimately even US has got to pay a price. And if US moves into a recession, then I think that is a bigger risk than tariffs. So I think we'll have to wait and watch, Sakshi. But I think overall, at the sector which I mentioned to you, companies like Varun Beverages within the hotel space, companies like Indian Hotels, or for that reason, visa players like the BLS International, cement companies like Ambuja Cement, L&T, in the engineering pack. I think these are all companies which give a better source of comfort in the given scenario. So I think it's going to be largely the large cap stocks, and I think yes, I cannot ignore banks. Banks, both from the private and the public sector space, are definitely looking attractive. In my earlier conversations, also we had told you that PSU banks look very attractive because some of the banks, PSU banks, are trading actually below their book value. Something like Bank of Baroda, Canara Bank, PNB, or for that reason, SBI, which is the market leader in the PSU pack. So I think one needs to be very careful in allocating capital now. But these could be the sectors where one could get definitely a reasonable kind of risk reward in the given scenario.
Okay, fair point. Kiran, we'll also include you into the conversation now. What have you spotted in the interim? First, about 15 minutes, 17 minutes are out in trade. There is some sanity returning to the markets. Real estate is doing well right now. Top moving sector, 1.8% of a gain. This is recovering some of those losses that sharply, sharp cuts we were seeing on realty as of yesterday. Financial services, IT, banks, auto, slight gains in mid caps, consumer durables and FMCG are also being seen. So some of the stocks are actually coming up. What's caught your attention?
Looking at the overall structure of the market and waiting for this international news, definitely IT between very much into the pressure, but the large cap IT stock has recovering from lower level. If you look at the Infosys recovered by 1% from the yesterday's close, and it is showing some strength also. Similarly, if you look at the TCS also recovering from the low end, it is sustaining. So large cap IT, one can look into that. Infosys looks very much promising. Multiple bullish divergence over there. It's a bit risky call, definitely considering today's the tariff news. But yeah, you can go long on IT as current market price on Infosys. In fact, particularly at current market price, keep a strict stop loss below 1500, and you can expect price target of 1640, 1615 upcoming time. So go long on IT. Be a little bit cautious, but yes, it looks very much promising. One more sector which we are liking, that is the metal sector. Metal sector is also remained silent, or because of this tariff news being in high beta stock, it is retracing its previous breakout. So Tata Steel, one can look into that. From level of 150, it has given a breakout. It's reached to the 160 level, and now again from 160 to 150, stock price above its 200 days moving average also. It is forming a rounding bottom pattern, and again on the prices has a very good support of, as we discussed, 200 days moving average. So one can go long on Tata Steel at any dips towards 150, 151. Keep a strict stop loss below 148. And again, you can expect price target of 160 in upcoming time. So IT and metal could be the sector which we can look into.
Okay. Mr. Gorakshakar, we'll again come back to you. You've mentioned the key sectors that could get largely impacted by tariffs, and those which could have the, probably hedging positions could be made in. I also wanted to ask you, when it comes to diversifying, what is your sense on gold? Record high levels continue despite surging 32% in the last financial year FY25. Gold prices are continuing to soar higher. There's again this expectation that in case the interest rate cuts will be announced, that will further aid the momentum. Uncertainty that it is continuing in is leading to higher prices. Even in the domestic market, now the question is, by when can gold prices soar to 1 lakh rupees? What's your sense here, sir? And do you think again FOMO, which was existing in the earlier rally in the markets, is now shifting to gold at this point in time? Do you think investors should now be very careful if they want to go all guns blazing on gold at this point?
Yeah, I think, see, Sakshi, gold prices are going to go up because gold prices always go up when there is uncertainty in the global market. And I think with the, tariff war started, this uncertainty has increased. And that is the key reason the gold price has gone up. So we believe that gold has still got a long way to go up. I think if one has to play gold, then I think, you can look at the gold finance companies like Muthoot Finance, Manappuram. I think clearly, these are the companies which are doing very good business. In fact, Muthoot Finance previous year, made a profit of 4,000 crores. This year, they could end up with something like 5,000 crores profit. And I think the asset quality, the loan to value is going to get better and better because as gold prices goes up, their business is more protected. And I would say that on dips, definitely Muthoot Finance, even at the current levels, or maybe a Manappuram, where Bain Capital has taken a significant equity stake recently, could definitely be qualified as good bets to play on the gold theme. And I think gold will continue to go up because uncertainty is prevailing in the markets, and that uncertainty will obviously lead to people and investors actually hedging their bets by buying gold.
Okay, fair point. So that's as far as gold is concerned. Even Kiran was talking about the metal story as well. Beyond the precious metals, one can definitely look at. Kiran, wanted to ask you on the consumption story. Gold also has a lot of theme to do with consumption. What exactly would you really look at once one is expecting that the budget announcements kick starting, more money in the hands of people will finally start to get poured in into consumer durables or an FMCG space? How would you look at this space right now, Kiran?
So after that news, we have seen that consumer durable stocks are moving up, but now that entire story is getting again reframing that this consumption can be happen into the some of the luxury spending or maybe into the reality space spending. So considering the budget announcement, which we are like, but after that, what we are liking that one is the real estate sector and another is the auto sector. So definitely in India, if you can see that many of are using a two-wheeler, so from now this consumption story can shift to the four-wheeler and the M&M or maybe the Maruti can be the stock where we can look into that. Now coming to the another that gold has already been a very good kind of an investment perspective as on India. But at current market price, I don't think so in India even anyone is looking gold to buy. So any dip on gold can again add such kind of an interest. But as of now, whatever this budget announcement come, we are expecting any good recovery into the auto sector and the reality sector.
Fair point. Okay. Mr. Gorakshakar, I'll also come up to the other segments and sectors that we are looking at. Telecom is something that I wanted to discuss with you, especially after yesterday's move on Vodafone and the announcement that the government will be increasing their stake, converting debt to equity. How are things shaping up for the telecom space? Do you still believe that this is a trading play or a complete avoid even now? We've seen how prices have been faltering for the last 6-8 months for Vodafone Idea, but finally, after a long haul, there's this positive news that has come in. Do you really believe that this could provide that edge to Vodafone yet again, or should one just stick with the leader, Bharti Airtel, if one has to play the telecom story?
No, I think, I think one clear aspect about this announcement by the government clearly indicates that the government does not want Vodafone to fail. And now with a 49% stake, a lot of people in the markets are joking that, in fact, Vodafone could be classified as a PSU company. So I think clearly my sense is that, Vodafone shareholders should be happy that some amount of oxygen has been provided. But until the company does not continue to lose subscribers, they don't continue to record losses every quarter, things are not going to be positive in the longer term. I think you need to look at quarter to quarter numbers. My sense is that even the January to March numbers are not going to be great. We could see a reasonably big loss around 3,000 crores for the March quarter. But I think what spells out very clearly is that the government does not want any further disruption in the sector. And I think all the three players will make enough money. Vodafone obviously is going to be the weakest player, so it's going to be a trading bet. We saw a 10% move on the very first day after this formal announcement was made public. But I think the bigger beneficiaries could be players like Indus Towers, which has a large exposure to Vodafone and which is the largest tower infrastructure player in the country. So I think, obviously companies like Tejas Network, Indus Towers, the ancillary players to telecom companies will benefit more. And of course, if one were to take up a call purely on telecom, then I think Bharti Airtel could qualify as one of the best, bets considering the kind of scalability and the kind of opportunities we have. So I think outlook is positive. We are constructive on the sector, but Vodafone is a purely speculative bet. Our bet would be Bharti Ji.
Fair point. Let's look at some of the other spaces as well, Mr. Gorakshakar. Wanted to get a sense on, from you also on the consumption basket that we were discussing with Kiran. What exactly would you be betting on here with, the summer season kick-starting? One is that trigger. The other one is, of course, like I said, budget announcements kicking in. People will start having more money in their hands because of lesser tax outgo. Where do you think that money will go to? Do you think it will be retail? Do you think it will be consumer durables? Do you think FMCG will be benefiting? How will you really play this theme, sir?
No, I think, see, the consumption basket, Sakshi, we are positive on companies like Varun Beverages, which is one of
Hmm.
the largest, carbonated and non-carbonated beverages drinks player to Pepsi. They've now entered new markets like Ghana and Tanzania, and plus they are going to enter the snacking business and a very profitable business. Last year they recorded a top line of 20,000 crores, a bottom line of 2,600 crores. So I think Varun Beverages is going to show exceedingly strong growth even for the next 12 to 18 months. Our expectation is that we could see prices of 600 to 650 comfortably. The other stock which is very promising is basically the hotel and hospitality sector, because that is also one way where possibly people could spend up a little bit of their extra incremental savings. And of course, from the retail pack, we're positive on companies like Vishal Megamart, where they operate in specifically tier 2, tier 3 markets, where possibly you could see a lot of buying in the garmenting section, general merchandise, FMCG. So I think that is also going to be a fairly good bet if one were to look at a consumption play. And obviously, players like consumer, Crompton Greaves Consumer Electricals, which basically operates across tier 2, tier 1, tier 3 markets and operates in the electrical space. So a lot of these small items like electrical fans, geysers, these are items which possibly are going to be items where the mass population is going to use the incremental 12 lakh exemption benefit to buy these items. So I think you're going to see some better numbers coming in the April to June quarter. So I think that would be a reasonably good assumption to believe that something which is connected to the masses and which has got a large customer base will obviously benefit.
Okay. Kiran, to you now. Wanted to check with you what else are you looking at in the markets today? What else is standing out for you where investors can keep their focus on the markets? And again, it's a swinging between highs and lows, and we are looking at half odd sectors continuing to be under pressure. Realty, financial services, autos, IT, they remain into the green. But what is catching your attention at this point in time? Kiran.
Sorry, that question for me.
Yes.
Can you come again, please? Sorry.
So just wanted to check what else is taking your attention at this point in time. A lot of newer names getting added into the F&O space as well. Jubilant Foods, we were discussing about the consumption story. Do you think some of these stories are to be looked at this point?
So yeah, consumption story is already there, but if you're considering the FNO stocks perspective, we have some different stocks are also playing. Another theme is which we are liking, that is an fertilizer theme. If you look at the UPL and Chambal fertilizer, both has given a fresh breakout at current market price. After a breakout, UPL is into the consolidation zone, but looking at the overall chart pattern, definitely UPL looks very much promising on FNO space also. So at current market price, when any dips towards 620 would be the great opportunity. Keep a stop loss below 600, and you can expect price target of 700 very soon. Similarly, if you look at the Chambal fertilizer, stock price has a multi-month breakout. Stock price is consolidating since last 5 days into the doji candlesticks pattern. But overall chart pattern is very much promising. Definitely any dips towards 610, 620 would be the great opportunity to enter into the Chambal. And we can expect some price target towards 650, 660 for sure. So for short term or a trading perspective, Chambal fertilizer looks very much promising.
Okay, fair point. 9:49 right now. Mr. Gorakh Shakar, I want to just ask you before we let you go. For the new financial year, FY26, what is the suggestion that you have for all our viewers, retail investors at large, those who have already dealt with the last 5 months of pain and are again looking at the ongoing volatility and uncertainty? What exactly should be their approach so that they do not act like we already discussed in FOMO or under pressure or panic sell in any kind of a downturn as well? What exactly would you be advising for FY26?
No, I think, Sakshi, my guess is, that I think they should remain invested. And I think clearly the markets are now bottomed out. The panic in the market has gone out. I think you could see some recovery, from the April to June quarter. And I think hopefully by December, I think the markets could get back into a further stronger trajectory. I think it all depends on how corporate earnings stack up. And I think hopefully the tariff, kind of war or maybe the developments could probably be understood by this September of FY26. So probably, it's only a matter of time. I think we've seen very bad market times earlier, but I think this is just a correction. It is not something where the India story is completely out. So I think keep the faith in India and stay invested. And I think always remember one thing, that keep your expectations from the equity markets reasonable. 15-20% upside in this market is very much achievable. I think anything beyond that will be a bonus. But I think staying invested is very important. That's the message to investors.
Staying investment is more important. Well, thank you so much, Mr. Gorak Shakar, and thank you so much, Kiran, for being with us in the morning edition of Market Today. Hope you both have a fantastic time. Till the time we see you soon on another edition of Business Today Television. 23,200, so we're not very bad at this point in time, but dwindling off from the day's highest point. There is a lot of volatility that's taking place. India VIX is up by about 0.7%. Let's see how this goes on. We've started off on a positive note ahead of the Trump tariff announcements tonight, but let's see whether towards the end of the session also we are able to hold on to these gains, or there is some more volatility that we need to face. Stay tuned with us on Business Today Television, viewers. Throughout the course of the day, we'll continue to get you meaningful conversations from top market voices, and we'll also be back at 12 noon with daily calls answering all your stock related queries. In case in this current volatile setup you are really not sure of how to go about the stocks in your portfolio, ask that doubt with the top market experts answering you in a customized way. 12 noon, you can send us your questions. The WhatsApp number continues to flash in, and you can also send us your questions on our social media platforms as well. Many thanks for tuning in for now.
Ladies and gentlemen, a very warm welcome to our special series in Market Guru, where you get to meet the